everyone, welcome to another MetaStock webinar. We are so excited to have you here today. Today we are excited to have with us the gentleman from GoNoGo Charts. They are going to be talking to us about trend following solutions simplified. So we're very excited about the upcoming webinar. If you haven't heard Tyler and Alex present before, you're in for a treat. They are great presenters. We really enjoy having them in the room and having them talk to us about their solution. So stay tuned for that. But as you come in, please tell us who you are, where you're coming in from. My name is Kelly Clement. I'm here in beautiful Salt Lake City, where we're having a gorgeous, beautiful day today. It's one of those days I wish I was out skiing, but I'm excited to be here too. So both of those work. But say hello, tell us where you're coming in from. We're excited to have you here. We're going to get started in about 6 minutes. We are MetaStock. We are purveyors of technical analysis and charting software. If you are not familiar with MetaStock, I'm going to show you just a quick video about who we are, what we do, and then I'll be back with you in just a few minutes.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, great. There you go. That's a quick introduction to MetaStock, who we are, what we do. It looks like we are about 2 minutes from getting started with with Tyler and Alex from GoNoGo Charts, talking about institutional trend following investment strategies simplified. So I'm excited to learn from these guys. I always get a little bit of new information every time I hear them, so that's always great when you can get that from presenters. So even if you've heard them before, you're going to learn something new today, which is awesome. So let me go check in with the presenters. I'll be back with you in just a moment. Looks like we are all ready to go here in 30 seconds. So again, welcome today. Glad to have everybody here. Everybody's a little quiet in chat. As we're going through the presentation, feel free to ask any questions, dive in, and you're here to learn. So make sure you ask some questions so you can understand the concepts that you're being taught today. So be involved, be part of the group, and we will get started here in just a minute. We'll see you on the flip side. Thanks, everybody. Let's get started.
Hey everybody, I hope you're doing well. Thanks for coming tonight or watching the video, either one. If you're watching us on YouTube, hit like and subscribe while you're thinking about it. It does help a lot. I do appreciate it, and we always appreciate it. Also, if you haven't subscribed to the channel, we have great guests like Tyler Wood and Alex Cole on all the time. So it's always a good place to kind of come and get some market information. With that being out of the way, let me read a legal disclaimer for you guys. And next, okay, today's demonstration is designed to instruct you on using MetaStock and the coming software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by those investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I don't have to read the rest, so I hope you had a chance to read it. I do want to welcome today Alex Cole and Tyler Wood. Tyler Wood has actually been in the business for a number of years and actually is an integral part of the CMD Association. Alex Cole is also somebody that we've had in the room quite a few times now. He's developed the GoNoGo strategies, which have been very successful with our audience and with MetaStock users, and people are really, really liking them. So thank you for bringing those to us, guys. Thanks for joining us. I think that's it. Let me go ahead and turn the presentation over to Tyler. I like to get out of the way and let you guys talk about the important stuff.
Well, Jeff, thanks so much for having us. Kelly, thank you as well. And really the whole MetaStock team, all of the coding that went into bringing these charts to life on the MetaStock platform. That's a tremendous amount of work that always happens behind the scenes. So thank the mysterious man behind the green curtain for helping us do that. And thank you all for joining us tonight. Markets are closed. It was another wild one. Feel free to take a deep breath, have a cup of tea, a cup of coffee if you're still doing that this late in this late hour, or whatever beverage you've got at hand. The next hour, Alex and I are going to talk to you about some bigger picture ideas to help you with your trading strategy. We're going to help you simplify your investment decisions, eliminate all of the analysis paralysis that comes with very valuable technical tools, but what can be very overwhelming for a lot of traders. And so tonight we're going to talk a little bit about trend following and the investment strategies that Alex and I have learned for years in the business, sitting at the elbows of institutional traders, portfolio managers, huge mutual fund houses, and then some of the top research analysts from the bulge bracket banks to understand their process and their tools. And what Alex has created in GoNoGo Charts is really monumental for those who are getting into the business and starting to learn how they can read the message of the market. So Alex, let's dive right in and talk a little bit about trend identification.
Yeah, if we love this quote. There's a few quotes in here. Maybe we're closet English literature people, but there's a few quotes that we like to use, and this one is a great one. And it's if you take emotion, the would be, could be, should be out of it, and look at what is and quantify it, then you'll have a big advantage over most human beings. And we really believe that that's technical analysis. We believe in a disciplined process. We believe in a checklist. We'll get to all that in a minute. But this is a quote by John Henry. He owns a number of things from football clubs to baseball clubs and is one of the greatest trend following investors probably of our time.
Yep. You might be familiar with John Henry if you've ever read the book or seen the movie Moneyball. And this idea of objectifying or quantifying what it is that we're seeing in the markets, taking the human emotional aspect out of it, is something we're going to talk about all night tonight. So if you've seen Moneyball, you know that they are heavily focused on statistics as opposed to their opinions about players. They want to look at the averages and the stats from players that they're recruiting. And so John Henry grew up on a soybean farm, started trading commodities in his family's business in the 1980s, and understood that it wasn't about any opinion or any narrative of what was happening, but rather just quantifying what was happening in terms of price and volume. And if you can systematize that, you can follow those trends for the long run, and you can make money over time. That's what we're going to talk about today, the objectifiable, the quantifiable aspects of the market. And real quick, I want you to stay with me here for a minute. We're going to talk a little math, but I promise it's not too scary. We're going to talk about the expectancy formula and what it is about human behavior and cognitive biases that really get in the way. We know from folks like Amos Tversky and Daniel Kahneman, Nobel laureates, who have understood and even written tomes about what they call heuristics, the things, the mental shortcuts that we've all developed through an evolutionary bias from 10,000 years ago. For example, we understood that it was safer to travel in groups, right? You don't get picked off by the saber-toothed tiger. Well, that happens in the markets today. We call it trend following. We call it a price trend, but they would call it the herding principle, meaning that people follow on to trends as they're happening in the marketplace. So we're going to talk about the expectancy formula and the idea that if you let winners run, you can capture outsized gains. And if you can cut your losers short, when you're wrong, when you place a trade and it works against you, if you can get out of those quickly, you have the chance to make money over time. You don't have to be right all of the time. And that was one of the most surprising things to Alex and I 15 years ago when we got into this business, talking to the institutional money managers who said, you know, the best stuff, the stuff that really has an edge, maybe works 60, 65% of the time. So you know you're going to have losing trades. But if you can cut those losers quickly and get out of those positions, manage your risk, then you avoid that risk of ruin. So what we're talking about here on screen, let me grab a laser pointer here real quick, is this break even. This curve right here are all of the trading systems that are going to break even. And what we're looking at on the x-axis is the number of winning trades in your system. Let's say you place 100 trades and only 50 of them work out. Well, that's no problem as long as your winners are at least outsized your losers. And you can go all the way up the curve where only 20% of your trades work out, but as long as your winners are 4 times that of your losers, you continue to break even. And what we want to identify are trading systems that are out here in this benevolent frontier of winning trades that also capture large size gains. And in the 4 outcomes, right, we can have a small loss, we can have a small win, we can have a big win, we can also have a large loss. And we want to avoid that 4th option at all costs. And so GoNoGo charts are going to help us stay with those trends, be patient investors. If you're like me, you want to lock in that gain as soon as you see it. You've made 10% on a trade, you want to close it out and recognize that win. But you might miss the next 90% of the move, and we want to be patient investors.
The broadcast is now starting. All attendees are in listen-only mode.
And so these tools are going to help you stay with those trends. Yeah, Jeff, are we doing
I'm
okay?
sorry, Tyler and Alex. I have a confession to make.
No problem.
You might have heard that the webinar just started.
I did.
So YouTube has been with us all along, and they've been able to hear, but you might want to just recap a little bit for the people in GoToWebinar. My
Sure.
mistake.
No problem.
Totally did it on the accident. I'm sorry.
Hey, it's 2022. It's after 5 o'clock. These things happen. We'll back up just really quickly. Alex and I were talking about the importance of objectifying, of quantifying tools, and then sticking with trends. John Henry is the owner of Liverpool Football Club, as well as the Boston Red Sox. For those of you who have watched Moneyball or read the book, you know that this was all driven on statistics as opposed to the recruiter's feelings about a player, their storytelling, or what they expect would be a really vital player on the team. Instead, they just want to quantify what the player performance really looks like. And that's what we're trying to do with our trades as well. We want to avoid the narrative. We don't want to develop strong opinions one direction or the other, because we cannot forecast what's going to happen. Instead, we want to quantify what's happening from a price perspective and stay with those trends. So right now, we were just doing a little bit of mathematics. We're talking about the expectancy formula and why it is that human beings have this need to lock in a win quickly. We want to exit those winning positions quickly because it feels good to recognize a 10% gain. But if we're not patient investors, we're going to miss out on the other 90% of that move potentially. Same thing with our losers. If you've had what was a trade that then became an investment, something that went against you 4, 5, 6, 10%, maybe even more, and you just held on to it because you had a strong conviction that the market was wrong and your thesis was right, this stock is going to come back. That's a really painful lesson to learn. The markets are a tough mechanism to convince that you're right. So what we're looking for are trading systems that are beyond this curve, where you've got a high percentage of winning trades and the winning trades are much larger than your losses. It sounds very simple to say, it's very difficult to execute in practice, but we want to let our winners run. We want to close out of those losing trades. And GoNoGo charts are going to help you avoid that analysis paralysis, that, convincing yourself that you should stick with a losing trade. We're going to objectify what's going on, and we're going to stay with those winning trades and be patient investors. So Alex, let's move on from the expectancy formula, and let's talk about the importance of routine. I know when you were working at Bloomberg, you worked with a lot of sell-side research analysts, and they had some pretty complex process, correct?
Yeah, and the thing that we always deal with is from wherever you're working, whether you're working with, I did a lot of work with new people to the industry, as well as with clients that had been doing technical analysis for decades. Mm-hmm. And the problem is the same problem, but sort of coming from different angles for a lot of people. And once you've found out that it is important to have a disciplined process and to follow a routine, that takes some of the emotion out of it, like we were just talking about. The problem that you're then faced with is, one, if you're new to the industry, it all becomes a bit overwhelming, all becomes a bit hard to understand. But if you're somebody that's a sophisticated technician already, you can come into the, and as I was finding myself, it's just being faced with charts that are complicated and are obstructing price action and making it hard for either me to read myself or to explain to other people. And I think that's what you were alluding to. When I would work with sell-side research, they would have a great system in place, but find it difficult to advise the buy side or show them why they were making the recommendation that they were, because the charts were so complicated and there were so many things on there. So we're going to talk a little bit about the importance of that routine and then show why that can sometimes become a problem.
And so a great mentor and friend of both Alex and I, David Keller, was the head of technical research at Fidelity Investments in Boston. At the same time that he moved up from New York to Boston, he was starting to learn how to fly. And so in a lot of presentations at the CMT Association, where he was also a president of the organization, he would talk a little bit about the similarities between investing and flying a plane. And he said, you spend so many hours sitting on the runway with the flight instructor, just going over checklists, making sure you have exactly in hand what you are going to do in a step-by-step process should something happen. So when you get up 10,000 feet above the ground and you're in a little tin can and the flight instructor kills the engine, he said, there's a gut-wrenching feeling. It's panic-inducing as the plane noses down and you think about your own mortality. Same thing happens in the stock market. When the markets start to crash, for those of us who are fully invested in January or February of 2020, when we saw things start to roll over, that's a panic-inducing moment. We need to have a plan in place, a checklist, if you will, that tells us when it's time to get out. That's the expectancy formula. We want to cut our losses as quickly as we can. We want to identify when those trends end. So in the case of flying a plane, it might be something as simple as, your knee bumped the fuel gauge and you have your oil mixture is too rich. But in the case of technical analysis, we could look at a number of different tools to develop that checklist, to quantify when a trend has come to an end. You might look at things like trend lines and moving averages. You might look at areas of support and resistance. You might have some volatility measures or some oscillators. You might be looking at momentum. You might have a lot going on your chart. That doesn't mean you have a bad process, but it does start to end up with a chart that looks like this. And as we were saying earlier, we're all human beings. We all suffer from the same cognitive biases. You get enough lines going on your chart and you can convince yourself of just about anything. That analysis paralysis is what we're trying to avoid. We want to simplify what we're doing on the charts to make our trade decisions easier to execute so we can get out of losing trades quickly and stick with those that are continuing to run. So Alex, let's talk a little bit. Let's build a chart, basics of technical analysis, what somebody would build into a chart layout that would identify when a trend is taking place or when it's coming to an end.
Yeah, so we'll roll through this quickly because then we're going to get to some current market charts as well. But this is just an example and not a best recommended or anything like that, but an example of a solid process of identifying trends, something that you might come across if you're talking to a technician on any of the big desks that I would work with. And the first thing that you can do is just eyeball the chart. And from just looking at the price action, you can tell if price is moving in any discernible direction. Right? In this case, it's going from bottom left to top right. We're looking at a trend. And if you can start to identify the trend, you've really sort of done the most important thing. If you can identify a trend, you can profit on the majority of the move. You can sort of find the bulk of the movement of price to be trading in that direction. And it's like Tyler said, it's simple, but it's not easy. So as we go through this, we're going to sort of add things to the chart to give us an idea that that's actually happening. So after eyeballing it, you might try to find an automatic way to find those higher highs and higher lows, which is so necessary for identifying trend. And you might think of something like the Donchian channels to do that. Now, if you're familiar with our presentation, so if you're familiar with some of the crazy stories in our world, you'll have come across the turtle traders. And the Donchian channels were their main technical indicator for entering into positions. And all the Donchian channel does is looks back over a certain time frame to find out whether or not price is at the high for that period. If it is, then that red line will move up. The green line underneath is corresponding lows. So the highest low over that look back, and that corresponding low will move up as well if we're looking at an uptrend. But then there's more that you can do. You might put on Bollinger Bands to see if price is trading outside of its 2 standard deviations away from a mean. We know that's significant information. You might throw on a moving average to understand where price is relative to an average of its historical prices. And if it's above that average, then that's inherently bullish. Going beyond that, you might put other things on there like volume, which is probably the most used sort of secondary piece of information. Volume used to confirm or to not confirm what we're seeing in price action all the way back to Charles Dow. And then you might throw an indicator on the bottom, such as MACD, which is a bit of a blend between momentum and trend. It's a bit, you can argue the case for either of those, but that will look at the difference between two moving averages to understand whether prices, relatively speaking, in the short term are moving higher than prices over a longer period. Now, you can now at this point, if you're looking towards the left of the chart, you can see where the Donchian channel made a new high. You can see price moving above its moving average. You can see that perhaps the volume of a couple of green bars of volume there, high at the beginning, and then further on, MACD's crossed above zero, is now in positive territory. And so somewhere towards the left of this chart, maybe sort of, 20% in, you're starting to say, I think we might be recognizing a new trend. We're seeing higher highs, and we've got all this information telling us that perhaps a new trend to the upside has begun. But the problem with something like this is it's very sound technical information that you're looking at, and it's a good process that you've worked through. But this is very, very simple compared to what a lot of us are doing. And even here, you're starting to crowd the chart, and you're starting to see that price can become a little harder to see. Maybe it's harder to find those important levels of support and resistance that you might look for on the price panel. So that's how somebody might go through a process, and then this is what you will start to end up with.
But what Alex has done, and what the way that we learned technical analysis and the CMT Association, is that you want to look at the weight of the evidence. You don't want to throw out all of that important data that we just put into that chart, but in a cleaner, more elegant fashion, we can see trend on this chart. And in fact, a go-no-go trend includes much more information than what we just went through in building that trend identification checklist. And so, Alex, why don't you talk a little bit about what you built and what these colors mean on the chart in front of us?
Yeah, so the idea then was to take all of the information that I'd found valuable and useful over time from working with clients and my own analysis, and try to put it into something that color-coded the price bar based on the strength of trend. And then that way, that would leave price as the focus and allow me to really get a sense of what the technicals were saying about trend without overwhelming the chart. Like, right away on this chart, I can see a double top towards the far right. You can see important congestion areas throughout the middle of the chart. You can see them getting sort of broken with the trend color moving out of that levels. And so there's all kinds of things that you can see here, but you're seeing it with the confidence that comes from knowing what the trend is based on a weight of evidence approach, where you take some of the most widely used and sort of robust statistical measures of trend following and put them into something that color codes the price chart. So that was the goal, and this is what we came up with when we're looking at the go-no-go trend.
So as a quick review, when we are in uptrend conditions, when that stock or security that you're looking at is a go for an investment, we're going to go long. That's the aqua and blue bars. So a weaker trend condition when you see aqua bars, strong trend conditions in the blue bars. And then to the downside, when we're in a downtrend, you're going to see the same things. Light pink for the weaker trend conditions, strong in the purple bars. That's when we are in a stronger downtrend. And then right in the middle, oftentimes in a reversal, a change of trend, you'll see these amber bars. Alex and I have been fascinated by the life and work of Jesse Livermore, and he has a great quote that there's a time to go long, a time to go short, and a time to go fishing. Probably one of the best trend following pieces of advice you can get out there. And so those are the go fish bars. We don't want to be entering into positions when we're in amber neutral territory, where the weight of the evidence, the composite blended technical checklist is telling us it's neutral. We don't have directional movement in price. Now, what's great about the team at MetaStock is that we're really proud of this work. We want to share it with the world. And so they have actually created a free, accessible version of GoNoGo Trend right on MetaStock for all of you to use. And for Alex and I, all we ask in return is that shoot us a note. Tell us how it's working for you. Tell us what you look at, time period, what you're trading. You can shoot us a note at info@GoNoGoCharts.com anytime. But Alex, do you want to talk a little bit about how they can get that free template?
Yeah, it's just on a right click and then apply template. And then that opens up, if you're familiar with MetaStock, that opens up your area where you can select any of your templates, and it's called GoNoGo Charts template. That's the free one. And then we have a GoNoGo Charts complete as well, but it's just from the right click, apply template. You can also do it right from when you're opening up the panel at the beginning and you're picking your securities and the charts, you can select the template on the bottom right. But the easiest way I find to just tell people is right click and apply the template.
Absolutely. So it couldn't get more simple than go or no go, right? We want to be in the positions that are goes. We want to get out when they're no go. Now, of course, we have found that technical analysis applies to all asset classes, all time frames. It's useful no matter what your trading strategy is. And GoNoGo charts are the same as any other technical indicator. They work across all asset classes and all time frames. But what we want to really focus on is that price action. Mark Abraham says that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. So we want to keep our focus on price action, and we're going to use these GoNoGo charts to help identify the trend without clouding our charts with that checklist. So again, if we're just considering the trend, if we just simplify it to its most basic level, those are our 5 colors that we're going to look for. Let's do some together, huh? Alex, for everybody who's on the line, if you're watching this on YouTube, you can throw it in the chat. If you're on the webinar, feel free to type it in the questions box. But if we're looking at a daily chart of the S&P 500, where are we at on the far right side? Right, we're in a weak no-go trend. We've got a pink bar today. Now, Alex and I write research every week and every day to all of our institutional subscribers. We've been talking about this no-go trend in the broad U.S. equity indices for months, really since the start of 2022. And what we're faced with, as every news agency out there is talking, is this a tweezer bottom? Is this the beginning of a structural uptrend, or is this just the dead cat bounce, to use the jargon of the industry? Are we just reflexive rebound in a longer term downtrend? The fact is, we can take all of that subjectivity out and just look at this trend indicator. Look at GoNoGo trend and know that the weight of the evidence, the overwhelming direction of price is to the downside. We're in a no-go trend. All right. Now we don't have to just look at daily charts. Right. Charles Dow taught us 130 years ago that markets move over multiple time frames, and you can identify trends from the primary, secondary, and then the minor trend, shorter time frames. Now, he was a nautical man, and he liked to talk about the primary trend as the tides of the ocean, meaning not much influences the primary trend. So the longer you step out in terms of the periodicity of your charts, if you're looking at monthly or quarterly charts, you know that that is based on broad broad GDP, economic growth, the macro factors, and the underlying fundamentals of the securities you're looking at. That does not immediately react to the news. As you go down shorter time frames, you're going to go above and below that trend. Right, and for a lot of technical analysts, that shorter to intermediate time frame is where they found the most success, because you can trade in the upward bias of a primary trend, but trade around those positions using that secondary trend. And of course, the tertiary trend, right? If secondary are the waves on the water, the tertiary or the minor trend is going to be those ripples on the surface, and that's everybody's opinion, the reaction to the news, any information that's coming out on a very short time frame. You're going to see that revert to the mean around the other periods of trend. Now, GoNoGo charts, as we said before, work like any other technical indicator in that they are time frame agnostic. The colors are going to be the same, and they're going to show you the trend conditions over the period that you're looking at on the chart. So let's just look at a weekly of the S&P. And Alex, why don't you talk a little bit about what the primary trend is telling you for the S&P 500 right now?
Yeah, and we're new here. We're new into a no-go on the weekly chart. So for a while, we were talking about these charts, and we were looking at the daily chart and saying, okay, is the weekly chart going to hold its trend? In which case, you could be looking at the daily to say, okay, well, when we get some more favorable conditions, maybe that's a buying opportunity. But we're going to now be thinking that the weekly chart is actually showing as a no-go. We see a purple bar. It's a strong no-go. We're 3 weeks into a no-go. And so we have to now be careful, because the larger time frame trend seems to have changed. And if we then want to go further into, and what the way people will use this kind of multi-time frame analysis in the industry is to manage entries for positional trades that they're taking. So if you are talking to somebody who was, let's say, a portfolio manager, and they're saying to their traders, okay, the long-term trend is now also a no-go. The daily trend is still in a no-go. So that pink bar and everybody saying, is this a dead cat bounce? You might be taking the opinion now as a long-term portfolio manager that actually it's more likely, with the weight of the evidence telling us that it's still in a no-go, albeit a weaker pink bar, that the trend is still to the downside, especially given that the weekly is now 3 weeks into a no-go. So if you move to the next time frame, perhaps an intraday chart, or maybe this is not you as the PM, maybe this is your trader. Maybe you're talking to a trader who's now trying to take a position. You might be looking at the weekly for the last 3 weeks having been a no-go, and the daily being a no-go. So perhaps on the intraday chart, you're only going to be looking to trade in the direction of the trend. And you can see then we've got, I think this is a 2-hour chart, and you can see we've got some pretty strong moves to the downside on no-goes that would have been pretty good opportunities for somebody to participate in that trend.
Absolutely. But of course, we know you are not all just equity indexers, closet passive investors. We know that we want to look across all asset classes. And the great John Murphy, who is a CMT charter holder, very influential in the CMT program, and really wrote the book on intermarket analysis. And beyond John Murphy, Marcus Katsanos and others have tried to quantify and look at those intermarket relationships. Using GoNoGo Charts, you can also look across all the asset classes and get an overall understanding of what the global landscape is doing, and understand what's happening in terms of inflation and commodities as they relate to equities. So, Alex, do you want to run around the horn real quick?
Yeah, and this kind of thing is very, very valuable and useful because it allows us. I think Tyler, I don't know if it's a Jimmy Buffett song or if it's something you said, but somebody said, there's a trend somewhere, right?
There's a
wherever
bull
you are at 5 o'clock, there's a trend somewhere. That's the one we'll use. But so there are trends. We've been in this terrible, volatile downturn in U.S. equity markets, but there are trends. We've seen outperformance in other places. And we try to highlight that when we see it in our research. And you can just take a chart like this. You can create a multi-layout in MetaStock, and you can put the GoNoGo trend on a bunch of charts to give you a representation of what's happening around these major asset classes. So U.S. equities, yes, it's a no-go. It's been in a no-go. It's setting lower lows and lower highs as it moves through this no-go trend. Treasuries, same thing. All treasury prices, this is not rates. Treasury prices also moving lower. But oil, we got pretty much since the beginning of 2022, that go has been in place, and we've been screaming higher. Today, I think, was ridiculous. I didn't catch it at the end of the day, but over 5%
today.
And so oil has been a good place to have some money. Bitcoin, we've seen it being a strong no-go for a long time, but look at it now, trying to reverse and trying to paint a couple of aqua bars. Gold is in a go trend. Gold finally, perhaps, right? The flight to safety that people have been expecting. But looking at this, you're thinking, okay, well, I should have been out of equities and treasuries, but oil has been a strong go. Gold has been a strong trend, and the US dollar has come back into a go trend as well on the bottom right there. So it just gives you a sense, perhaps, when we don't need to be so completely focused on one thing. We want to diversify, and it's so easy nowadays with ETFs. It was almost impossible a while ago, to be fully diversified across commodities and different asset classes and bonds and currencies and all the rest. Now, relatively easy. These are ETFs, most of these that we use in our research, just to point out that it's a equity trading on the US stock exchanges. You could be in oil and in that trend, and you can see that by getting a sense of the trend picture.
Absolutely. So speaking of the research, we're gonna turn our eye a little bit to current markets. We're not just going to cherry pick things from today. We're going to show you some of the ideas that have gone out to our institutional subscribers over the last several weeks and couple of months, and we'll just look at them together and see how things have played out. So GoNoGo research comes out every Saturday and every Monday. We do a chart pack review with all of our subscribers on Saturday. We feel like that's a really important practice to develop. Get away from the noise of the markets, just look at the trends across global markets and across asset classes to get a sense of what is working, what's outperforming and what's underperforming. And then on Monday morning, we're going to do a top-down approach, long-form newsletter, talk about some of the influences and current events and what we're seeing on the charts. So for those of you who are interested in that, come find us and check out the GoNoGo research. Now, we are extremely proud of just that trend identification piece. And if that's all you take away from tonight, fantastic. We want you to use that, simplify your trading decisions. But of course, we know that if we're going to optimize our entries and exits, there are a couple other pieces of the puzzle that we want to look at besides just trend. So the next half of tonight's presentation, we're going to talk about the GoNoGo Complete solution, which is also available right on MetaStock. And Alex, why don't we dig in a little bit, switch gears, and talk about what is included in that complete solution?
Yes, for sure. And so we'll run through some of these ideas as well that should be familiar with a lot of people. But with the complete solution of GoNoGo Charts, you're going to get the GoNoGo trend, which, as we've discussed, blends objective foundational concepts of trend following into that color-coded indicator. You're also going to get the GoNoGo oscillator. I spent a lot of my time studying and researching momentum analysis, and we'll talk about how that plays such a vital role in a minute. And we'll also comes with the GoNoGo icons, which highlight key points on the price panel, and then the GoNoGo squeeze as well, which deals with volatility. And the other piece in there that we haven't actually noted on the screen is volume analysis, also included in the panel along the very, very bottom. So we can get a complete picture of any asset and any security in terms of the technical environment. And that was really, really important for me because, you know, I might be talking to an oil trader in the morning and then a rates trader in the afternoon and then a long only fund manager the next day. And so to be able to just give myself a complete overview of the technical perspective of anything that was being thrown up on the screen was super important to me. And with that, you know, hopefully with that complete overview, you can make some good decisions.
So what most of you probably don't know is that I've known Alex for a very long time. He's been a friend for over a decade. And he was the lead instructor within Bloomberg, training all of the employees, but also clients, instructing them on technical analysis. He's been a frequent speaker at CMT Association conferences and events around the globe. And then because the CMT program, those exams to get the credential are so difficult, folks were looking for preparatory classes. And I turned immediately to Alex when the folks at John Wiley & Sons, our publisher, had asked, you know, do you have anybody who's a real subject matter expert that can break these things down, that really understands technical analysis, in particular what's on the CMT exams, to help people be successful in that program? So for many of you, Alex's face might be very familiar if you've spent the hundreds of hours studying from that preparatory course for those CMT exams. But there's nobody in my world that understands the basics, the foundation of technical analysis better than Alex. And so Professor Cole here is going to talk to us a little bit about momentum, which is perhaps the very next thing we need to understand once we understand price. So Alex, take it away again.
I feel terribly uncomfortable now after that.
You'll never live up to expectations.
Oh, dear. But it is true. I think what were there, 120 video lectures in that Wiley course? It was so. I'm sorry if you've seen too much of me. If anybody's currently going through that, hopefully they help a little bit. But so let's really quickly talk about momentum, because that's the next piece. After you've identified trend, you're going to want to know what momentum is telling you, and momentum really is important because it can tell us a lot about the strength of the activity that we're seeing in price. What it really does is it measures the rate of change of price. So it looks for situations where the velocity of price movement has perhaps been too great. And that'll help us understand a movement in price a little bit better. So what we want to do, and what I like to talk about, is cars. I'm British, and it's very much part of our culture. Formula One to World Rally Racing, and certainly not what you see on the screen here. Those are definitely not European cars, but they are very fast, all the less. And what you want to think about is acceleration. That's how I try to break it down. for people when I teach this. And if you think about a car approaching, let's say, a highway, on the ramp approaching a highway, it's going to increase its speed. And early on, it's going to increase its speed either, faster and faster, or it's going to increase speed sort of at an even level of acceleration. You might go from 20 to 30 to 40, at the same rate, because you've got a lot of that car's horsepower and engine to propel you to those speeds. But as you get faster, it gets harder to get faster. And also you've got to deal with speed limits, right? So if you're approaching a highway and it's 50 miles an hour around here, which seems ludicrous for a Brit, but you're going to increase speed, but more slowly, right? So you're going to go from 45 to 48 to 50. And then when you hit that speed limit, you're going to pull onto the highway. And that idea of still getting faster, but getting faster more slowly is how I kind of try to think about momentum and how to relate it to people when I teach it. Once you've reached the speed limit, it's almost as if you're hitting a top in price. And the next option really for you is either to, I suppose, if you want to spend a night in jail, you could keep going faster, but more likely you're going to flatten out your speed. And eventually you might pull off the highway and slow down as you go into a small town. So as you see that momentum wane, that suggests to us that something is changing. This price isn't moving higher as quickly, even if it is moving higher still. So that's the important point to remember. And I know, Tyler, you have a nice little story you talk about the baseball.
When I first started at the CMT Association over a decade ago, Ralph Acampora, who helped start the organization, he was one of the founding members back in the late 1960s. He's from the Bronx. Everything's baseball up there. But he said, think about momentum as having a baseball in your glove, and you throw it up in the air. And the moment it leaves your hand, that's when it's moving fastest. And then it reaches the apex, as high as you're going to throw it. As it reaches, it slows down and then comes back down into your glove. Now, momentum exploding and then retreating is going to happen a lot in trends. And this is what Alex is going to talk to us about. We just want to avoid the spot where, a doofus like me doesn't catch the ball back in his glove and it falls negative. But we'll talk about that in just a minute. So same idea, blending objective, widely used, back-testable ingredients to a momentum oscillator. Alex, why don't you talk to us a little bit about the GoNoGo oscillator?
Yeah, so we don't need to dwell on this slide, but basically the idea is the same. I find value in quite a few momentum indicators, and so I wanted to incorporate them, and not just those indicators, but different inputs, different sensitivities, different periodicities within that momentum analysis, but put it into something that didn't overwhelm the price chart, right? So the goal, remember, was to create a complete understanding of any security from a technical perspective without complicating the chart. So when you add panel after panel after panel, it becomes complicated. So the GoNoGo oscillator includes several of those momentum ideas that you'll be familiar with in several different forms, from shorter term to longer term, to get a sense of sensitivity. But this oscillator is what I look at now when I want to get momentum with price. And you can still use it in a traditional sense. You can find those areas of extreme overbought or oversold levels. You can find those at peaks and troughs in price, just like you would with any oscillator going into their overbought and oversold areas. You can also identify divergence easily. Huge concept in technical analysis. And as price makes a higher high, if your oscillator makes a lower high, we know that's a warning signal. And so you can, of course, get that kind of information out of the GoNoGo oscillator as well. And we've also incorporated volume, and on MetaStock, it's incorporated in that ribbon that goes along the bottom. When you see that blue pop out, that's telling you that volume is heavier than it has been in its average of the past. And so you now have that sense of everything. What's price doing? What's the trend? What's the momentum? What's volume? And if we move forward, what we then want to talk about is not just the traditional way of using an oscillator, but the way we use it with the GoNoGo oscillator that we hope has a little bit of value and can add a little bit to how you try to follow trends. We've done all the research. Well, I say we, the royal we, right? Yeah. We in the industry have done all the research. Great great books written by people like Connie Brown and others about how momentum can be used to help understand trend. That's not what we were taught when we were learning it from the textbook. We were told that momentum indicators identify price swings, peaks and troughs as price moves in a range or sideways in a volatile fashion. But
and just think about, the illustrious Gerald Appel or some of these folks who were creating indicators in the 1970s. What were the U.S. equities markets doing in the 1970s? Frustrating every mutual fund manager on the planet because they would go up and come back down. And we were in a range-bound system. So oscillators, looking at that momentum, it was, once it gets to overbought, we're selling because price is just coming back down. And it wasn't until later experts like Constance Brown and others who looked at those same tools, but in a very different market regime to understand how oscillators can be used in trend.
Yeah, and what they found was that these oscillators will range when in trend. And so if you're in an uptrend, something like the RSI will go overbought, which makes all the sense in the world. Enthusiasm, the trend is in place, people are excited, people are buying, an oscillator will go overbought. Then there'll be some profit taking, some digestion of gains. The oscillator will come back into its neutral territory. What it won't do, or what it shouldn't do in a healthy trend, is go oversold, right? So we know that from momentum analysis. But the problem we have with all of these oscillators, they're very choppy, they're very fast moving, and it becomes a subjective game where we try to find these support levels, these ranges that oscillators trade in, and they'll be different by security, they'll be different by asset class. Some people will say, I adjust my RSI levels because this market that I'm looking at is more volatile. And so you might be looking at 40 as an area of support, that range of overbought down to 40, overbought down to 40. But then you have to ask yourself, does 41 count if it comes to 41 as a touch of support? What if it goes to 38? Is that a break of support? So it's very subjective the way you can do that really, really valuable momentum analysis. So what we tried to do with the GoNoGo oscillator was calculate it in a way that causes it to go to zero when all of the combined blended inputs are in their respective neutral territories. So if everything that makes up the GoNoGo oscillator is within its neutral bounds, then the GoNoGo oscillator falls and hits that zero line in an uptrend. In a downtrend, it'll rise and hit the zero line. So what we end up with is a completely objective level that can be used as support in a go trend and as resistance in a no-go trend. And that allows you, hopefully, to stay with those outsized winners a little bit longer.
That's the classical difficulty that a lot of investors face. Is this a buy the dip moment, or is this the beginning of something worse to the downside? So if we're using Ralph's analogy and all those Bronx baseball players, ball is still in glove, right? We're still playing catch throughout this trend. And every time GoNoGo oscillator comes back to zero, catch it in the glove, no problem. Momentum surges as price surges. Momentum wanes as it digests those gains. And for trend following investors, we don't want to whipsaw out of this trend every single time we get a counter trend correction. Instead, we want to stick with it for the long haul. And this could be a 1 minute chart if that's your time horizon. Could be a weekly chart if you're a large institutional PM or even a self-directed investor who doesn't want a lot of turnover in their account. We want to stay with those trends through the meat of the move, and we can look to that zero line on the oscillator to know that this trend is still healthy as long as that oscillator is above the zero line. As Alex was saying, all of this works in reverse. If you're playing to the short side, if that's part of your investment discipline, then you would watch that oscillator come to the zero line and be rejected back to negative. That means our downtrend, our no-go conditions are continuing every time the oscillator gets rejected at the zero line and we have further downside momentum. All right, let's keep moving. Thank you everybody for staying with us. We've talked about trend, we've talked about momentum. Alex has got years in the business working on things called data visualization. These are the mental shortcuts. We can gather a lot of information with our eyes, because that's how human beings were, that's how we evolved, to see predators and prey in the bush. And so on your charts, we want to give you those visual cues for important spots. Alex, let's talk a little bit about the GoNoGo icons.
Yeah, so quickly, the icons are just highlighting those important areas that are based on the interaction of the oscillator with the zero line and with the trend. So the first kind of icon that we want to highlight are trend continuation icons. That's what we were just talking about. Trend is in place. We want to understand, is it going to continue or is it something worse? So we highlight the return of momentum in the direction of the trend. And so you can see throughout this chart, those green circles, because it's a go trend, are telling us that we have trend continuation. If we were in a no-go, those would be red circles telling us we'd have trend continuation going down. The second kind of icon on here is because I am a big believer and user of momentum analysis in its traditional sense as well. So we wanted to highlight those areas of extremes of overbought and oversold as well, and where we might see that pullback as you'd expect from any kind of momentum indicator. So we call those counter trend correction arrows. And in a go trend, they'll be red, telling you that in the short term, this go trend, while it's not broken, it may struggle to go higher in the short term as we see some counter trend activity. It might be just consolidation sideways. It might be a small pullback against the trend, but it's telling us that price has moved really quickly in one direction, that typical use of momentum, and it might cool off and your oscillators coming back into neutral territory.
And again, we don't simply sell overbought conditions and buy anything oversold. The great Ralph Acapora said, imagine you've got a beach ball in the pool and you push it underwater. That's getting to oversold. Let's say you let go and the ball doesn't come up through the water. First of all, where the hell did you get that beach ball? But also, we don't want to buy just because something is oversold. That means it's in a continued negative condition. And so using those oscillators in the traditional sense can be really powerful. Maybe it's not that you are ready to exit the trend, but maybe some life event happens and you need to move some money out of those positions. Taking profits at a counter trend correction arrow, it's not a bad spot, as you know that the probability is on your side, the price is going to correct, and this is maybe a near-term high. All right, beyond volume, momentum, trend, and the data visualization, let's talk about the last piece, which is understanding volatility. Right, Alex?
Yeah. This was really the last piece for me when I wanted to say, okay, look, I need to be able to talk to anybody about everything technical. And it was like, okay, I need volatility.
Simple task.
Volatility is important in analysis, and you probably on the call are familiar with Bollinger Band squeezes, Keltner Band squeezes, that kind of idea. And I wanted to figure out a way to visualize reduced periods of volatility so that we could then expect something significant. We know that when Bollinger Bands tighten, we trade in the direction of the break. That's because we expect something important to happen as we trade outside of those bands. So as volatility is reduced, I want to find those areas on the chart. And so we created the GoNoGo squeeze. And what we can do is highlight every bar that the GoNoGo oscillator stays at the zero line. So if you think about it, we now know the importance of the zero line. If it hits the zero line, it should find resistance. If we're in a no-go, it should find support if we're in a go. So in this case, we're looking at right here on the chart, we should find resistance at zero. We're in a no-go trend. But we also are seeing the oscillator stay at that zero line for an extended period of time. So all those momentum indicators telling us we're in neutral territory, not a lot of directional momentum one way or the other. So when that finally breaks out, I was always taught to think about it as a tube of toothpaste. If that tube of toothpaste gets compressed, gets squeezed, eventually the top blows off, right? And you get a significant movement, in that case of toothpaste, right? But in this chart, we know it should find resistance. It didn't. So that's a cause for concern. And a breakout of a squeeze in either direction can lead to something significant.
Clearly, Alex has kids who like to squeeze the toothpaste. But when we're thinking about what technical analysis has done for us all, for all investors, it comes down to observing and visualizing what's happening in the marketplace. What is it that investors are doing? And so right here on this chart, we're coming down in this no-go trend, and then price, the range begins to shrink. We have neutral momentum. We've got high volume, which means there are lots of buyers and sellers, but we don't have a real clear direction on where this trend is headed. And of course, the break out of that squeeze, getting above zero, means positive momentum has overwhelmed the sellers. That tug of war is now over. For those of you who've watched Squid Game, it's a sad ending for the shorts here. and price takes off to the upside. Oftentimes in a strong or violent move when we break out of a max squeeze of volatility. So we've got trend, momentum, volume, and volatility all in a single chart that is keeping our focus on price. That is the whole point of GoNoGo Charts, is that we want to reduce analysis paralysis. We want to make sure that you can make simple, easy, executable trade decisions. So let's do a few together. We're going to look at some current examples. And there's really only 3 things you need to answer for yourself with every trade decision. Where's the trend? What rank do we have on the oscillator? And is there anything important happening at the 0 line? So let's dive into a few examples, right, Alex?
Yep. We're just going to talk about a couple of things that are working from research, and then we'll at the very end, we've got a few charts of just some things that we've highlighted this last 2 or 3 days just to get a sense of what we're seeing, and then we can see how they play out in the future. But energy's been taking off. It's been going crazy. We know this. So this is the XLE, the energy sector. Where are we? We're in a strong go. We're also at all-time highs. Easy to see because we're looking at a big price chart. The oscillator is at 6 right now. It's oversold. It's on heavy volume. But what did we see in the last couple of bars? We saw the oscillator rally off that 0 line. So we did recently get a trend continuation icon here. So a healthy looking chart for the energy sector. And I think the next
here's the week where everyone was asking, is the energy trade overdone, right? XLE, strongest performing sector throughout 2021. Oil was notching up towards $96, $98 a barrel. And then, of course, we had last week's geopolitical events, and oil is off to the races again. Investors piling back in, breaking out of that max squeeze. Momentum's positive, and we've got heavy volume as price makes these new highs. Yeah. Pretty easy to read on the chart, right, Alex?
Yeah, good that one. Yeah, clear.
Yeah.
And then this is one we highlighted in our research notes a couple of weeks ago. Marathon has always been a favorite of mine for whatever reason. I always seem to pull it up on charts, but what's happening here? Strong go, bright blue bars, multiple trend continuation icons at key points. Oscillator hasn't been broken since the start of this go trend, finding support all the way through. Right now, the oscillator is in positive territory at 4, and we see heavy volume again as we've made these new highs. So anything interesting happening around the 0 line? Same idea. Over the last few bars, it's found support again and rallied on heavy volume.
Absolutely.
So strong pick.
We were talking with Jeff ahead of the presentation tonight, and I know when he runs scans, there is just a plethora of names in the energy and exploration, refining, distribution, you name it. They're all working. Now, we know that you all have extremely busy lives, because we certainly do. And so when you sit down to do your analysis at the end of the day, or if you've got a shorter window to trade throughout the day, you want to make sure that you've got Alex and I looking over your shoulder and helping you out to make sure that you understand exactly what's on the chart. We've made it as simple as possible, but thanks to Jeff and the team at MetaStock, we also have expert commentary built right into the charts. Alex, this is an incredible feature, and maybe you want to talk a little bit about what they can find in
I love this about MetaStock. The commentary is fantastic. It's really just like having a couple of slides of the interpretation from us about what you're seeing on a chart. So on any bar, you can click on any bar on any security, and it'll give you really what we've just gone through in those last couple of slides. What's going on with the trend? In this case, this was a little while back now, but you'll see it'll tell you what's happening with the trend, tell you what value the oscillator is at. If there's anything interesting happening in terms of icons, is there anything happening in terms of trend continuation, counter trend correction arrows, and is there anything happening in terms of a squeeze? Is there a squeeze building? Is volatility being reduced currently? So you get that complete picture in 3 or 4 or 5 lines and a complete interpretation of the technical environment of the security. And then, of course, below that, a little bit of explanation about what we do at GoNoGo Charts. And then even better than that, what you can do from there is scan for all of this.
Right.
And this is just fantastic. Called explorations on MetaStock, but you can scan for any of those conditions that we've been talking about. Perhaps you want to find securities that have been in a max squeeze, or perhaps you want to find securities that are turning up icons, trend continuation. And that's another fantastic part of MetaStock, being able to scan, like you said, we're all busy people, and this really helps out. It helps me, I can tell you.
Alex and I do know the Wall Street analysts who click through 3,000 charts every morning to understand what's going on in the marketplace, but that does not need to be a part of your daily routine. And these scanning tools that MetaStock have built are really incredible, using that GoNoGo methodology to isolate the names that are going to be in the right kind of setup for your trading style. Again, Alex and I are not here to tell you one way to trade or any particular vehicle that you should be investing in. This isn't a product pitch for ETFs or for ADRs or anything else. What we want to do is provide you a complete technical picture and help avoid all of that analysis paralysis that comes with putting too many lines on your charts. All right, Alex, let's get back to the current markets. I know we've only got a couple minutes left. We want to respect everybody's time, and we're approaching 7 o'clock Eastern. Let's look at a few of the ideas that were in GoNoGo research.
Maybe move past this one.
Sure.
Let's try to get to a couple.
Couple of the real current ones.
Yeah, this was one that came out. Actually, not this one. This is just an example of what we do on a daily basis. But this is one that came out of the energy trade, CQP. This was January 26th. And if you see on this chart here, we got that Go trend continuation icon. If you move forward to the next slide, we can see that Cheniere, I never know how to say it, Cheniere Energy, it took off. It was that Go trend continuation in the middle that we noticed there. So that's an example of one that's worked and has sort of taken off. But if you want to go to the last couple, just to highlight a couple that we are currently looking at, this is another one that we were talking about, the commodities as well as energy. We talked about Rio on the 10th of January. This one has continued to play out nicely. You're getting those Go trend continuation icons as the oscillator found support at 0 again. So, all of those ideas that we were talking about, these are just some of the previous ideas that we were going to highlight. But these are a couple now from this week or this last couple of days, and we'll just be interesting to see what happens and where they go. This is Procept Biorobotics, and we noticed a new Go a couple of days ago, so that went out to subscribers. We're now seeing strong Go bars for a couple of days. The oscillator's at 6, and we're overbought on light volume. So perhaps we'll be looking to see a counter trend correction arrow, and then maybe price will come back. If the oscillator comes back towards that 0 line, we'll look for a Go trend continuation icon to see if that trend can persist. But that's one that we've highlighted as a fresh Go trend. Another one here is Consol Energy. The energy trade's still working and still doing its thing. So 2 bars ago we got another Go trend continuation icon. So that idea went out, and we've moved higher the last 2 days. So this has been nice in a couple of days. But again, oscillator getting overbought now. So we'll have to see what happens next. But a strong looking chart as well. And then this one is D-Local Limited, just because I was looking for max squeezes. And we can see here that it's in a max squeeze on a weak Go. But I like the look of this one because it looked like it was basing, right? So if you pulled back the chart a little bit more, which you can't here on the slide, it was in a strong no-go for quite some time. And this is actually one of our favorite setups. When you see the oscillator break above the 0 line, right while you're still in that no-go trend towards the end there, and then the trend indicator struggles to paint no-go. We go through amber go fish, goes to some aqua goes, comes back to the 0 line, and now we've seen ambers and we've seen goes again, and we're in a max squeeze. So now we'll be looking for that entry by way of a Go trend continuation icon on this chart. So this is one we're waiting for to see, does this trend stay in place? But I like it because we've set a higher low already. We can see that higher low there on the right. And if we find support at 0, we'll probably see a higher high set as that trend hopefully will remain in place.
Absolutely. I think it's worth giving a special shout out to Chuck Rademacher for noticing the webinar audio right off the bat and getting us started. But I really want to say thanks to Kelly, to Jeff, to the whole team at MetaStock for working with us to implement these tools right into the MetaStock platform. Again, those expert commentaries and explorations for you. Anybody who has questions while you're using these charts, you've got all of those tools right at your fingertips. And of course, the free template if you just want to check it out for a little while. But we wanted to say thank you. And Jeff, if there are some questions that may have come in from our YouTube audience or from others in the webinar. Happy to answer those right now, or hand it over to you for some further information. Jeff went on coffee break, everybody. So you're stuck with Alex and I.
I'm here. I was just checking YouTube one more time for questions and comments, and we don't have a lot of them. So
okay, great.
I think what I'll do is transition over here. I want to thank you guys for the work you've done in terms of putting things together and kind of getting it ready. And one of the things that's been very nice is like kind of the reception to this product. People really, really like it. They get it. It's something that they can kind of visually see. And great job with that.
That's all Alex. He spent his life learning and understanding technical analysis. And yeah, when he first showed these tools to me, that was really what caught my attention. Working with all of the best technicians around the globe with the CMT Association, I had never seen something that was quite so elegant, easy to use, and still so powerful in terms of the information it provided. So well done, Alex Cole.
And I remember kind of the passion that he approached things with, and just wanting to make sure everything was exactly kind of even down to the colors, everything kind of showed up. A great job. It really kind of that dedication shows up in the product. So I just want to recap for a couple of minutes in terms of what's in here. I want to verify that you guys can see my my PowerPoint now.
We sure can.
Okay. So at the heart of it all, you do get the GoNoGo Complete. Like I said, it's been a very popular add-on. We just released it last month. Or actually, I guess it was in January, 2 months ago now, because we're already into March. But it's been very, very well received by our database. People really, really like it. It includes the trend, the oscillator, all of the icons that we showed you, and then the squeeze studies. And you guys do a really good job of talking about what's in here, but you get the icon trend alerts. With the expert commentary, you have the clear English explanations of the trend trades and what's going on in every bar. You get the trend identification. And one of my things, my favorite things is the explorations, because for me, I have this job. I work here at MetaStock, and you're gonna find this surprising. They expect me to work during the day, which is crazy talk. Yeah. So, but generally, one of the things that I'll come in here and just within about 15 minutes, like the market here closes at 2 o'clock Mountain Time, which is 4 Eastern. And so in about the last 15 minutes of that, 1:45 is usually when I'll start to look at any positions that I've got, and then run an exploration of like this, basically my list. And then within because all it's automated and everything is kind of just put together for me, within 15 minutes, I can do all that work and get back to work and really focus on kind of the business that they pay me to be here for. I just love scanning. It makes it so easy to find opportunities that I never would. I'm not an institution sitting on a desk looking at 3,000 charts every day. It's just the ability to scan and find those things fast and act on those fast. I just love it. It's my favorite thing of MetaStock, and it's very well integrated with GoNoGo as well. So in terms of the package itself, it's a one-time cost here. Normally, you just pay for it one time. It's $1,495. We're still kind of doing an introductory special to get people using it, and it's been extremely successful. $995 is what we're doing. We do back it here with our full 30-day money-back guarantee. You can try it out. If it's helpful for you, great. If not, there's very little risk in that. In fact, if you don't have MetaStock already, we'll even throw in a free trial of MetaStock. And I'll tell you a little bit about MetaStock just in case you stumbled across the YouTube channel and have never heard about MetaStock. MetaStock's been rated #1 in its price category 29 years in a row. It offers data from just about anywhere in the world, and it allows us to do like the stuff that we're showing you, the scanning, the testing, the expert advisor, the alerts. All of those kind of things are kind of built into the engine that we've been designing for over 30 years. So we'll include a free trial of our award-winning MetaStock package, free of cost in case you've never used MetaStock before, if you need it. You pay $995. If you have any questions, we'll be happy to answer it. And it's a zero risk. If you don't like it, every time you trade, you wish you could get zero risk, right? The risk reward on this one is really good. So give us a call, 800-882-3040, metastock.com/sales chat. if you have questions or you want to see some charts, they can pull charts for you. You can also visit metastock.com/GoNoGo. So Tyler, Alex, I want to say thank you for spending an hour with us tonight. Chuck, I also want to say thank you for noticing my mistake to not starting the broadcast. We're human and I'm extra human. So that's, I appreciate you letting us know. If you're watching the video on YouTube, please like, comment, subscribe. All of that stuff helps us immensely and we really appreciate it. So thank you guys. Appreciate you coming in. Thank you for watching.
Thank you so much, Jeff. We'll do it again real soon.
We'll see you guys at the next one. Thanks, everybody.
Thanks so much.
Thanks, Jeff.
Bye-bye.